Welcome. It promises to be a busy week ahead. We look at the PMI numbers and economic data across all the major currencies. And with only 40 days until the US elections, is Trump feeling the heat? All this and more with Bob Mason of FX Empire. This is your week ahead. Hello, Bob, and thank you once again for joining us. Let's dive straight in, shall we? It promises to be a very busy week ahead across all the major currency pairs, specifically the dollar. What should our traders be looking out specifically, in your opinion?
It's a busy week ahead on the economic calendar. For the US dollar, consumer confidence at the start of the week on Tuesday, that's going to garner plenty of interest. Obviously, COVID-19, unemployment, and economic woes. How will consumers, relate to that? Then you got ADP non-farm employment change figures, second quarter finalized GDP numbers that shouldn't have too much of an impact barring deviation from, the previous estimates. You got ISM manufacturing numbers that will influence jobless claims figures on Thursday, and then you got non-farm payrolls and the unemployment rate on Friday, which will be particularly key. For the euro, there's plenty to also consider. Prelim inflation figures for September. We've seen deflationary pressures, build and, pressure the euro. So expect sensitivity to that. We've got German-French consumer spending, German unemployment numbers. You got Spain and Italian manufacturing PMIs and finalized PMIs for France, Germany, and the Eurozone. So there's plenty to consider for the euro. For the pound, quite a week on the economic data front. Just finalized private sector PMIs, obviously any revisions to service sector PMIs will have a more mature impact on the pound. So a busy week ahead.
So it does seem like the US labor market data will steal the show next week, something for us to look out for. Meantime, let's focus on Japan and China. What can we expect from them?
For the Japanese yen, it's a busier week than normal. Key stats, first half of the week, we got retail sales figures, industrial production, and inflation figures. Inflation figures on Monday, industrial production and retail sales figures on Tuesday. Then focus will shift to third quarter Tankan numbers on Thursday. So expect plenty of interest in the numbers. How's the Japanese economy faring going into the fourth quarter? Obviously the Bank of Japan raised plenty of uncertainty, and questions over what lies ahead, but failed to deliver any further support. So dire numbers could force the Bank of Japan's hand. That remains to be seen what they've got left in the tank. For the Chinese yuan and broader, market risk sentiment, we've got private sector PMI numbers due out on Wednesday. Markets favored Caixin manufacturing PMI is the key driver, and expect the numbers to have a key influence on market risk sentiment and obviously the commodity currencies.
With the US elections just 40 days away, the heat is really building up on President Trump, as well as the coronavirus pandemic possibly hitting a second wave and Brexit coming up. What other geopolitical risks should our traders be looking out for?
Finally, on the geopolitical risk front, well, there's plenty to consider. We've got less than 40 days until the presidential election. Trump's already, riling China at the National Assembly, UN National Assembly. China once again took the blame for COVID-19. Trump asking for China to take it on the head and, take the blame for that. And we're going to expect that narrative to continue. It's all about the vaccine for Trump. So, we've seen the polls reflect a narrowing in the gap, Trump finding some hope going into, what will be, the last 40 days. So expect market volatility to pick up on that front. Brokers are beginning to ask for clients to increase margins, anticipating significant volatility before and after election day. So that's the key driver for the US. Obviously, you've got COVID-19 as well, and the impact on market risk sentiment. You've got Brexit for the pound. Obviously, that's going to be a key driver. We're waiting for the internal market bill to make its way to the House of Lords, to see what goes on there. Expect any chatter from the EU and the British government to influence in the week ahead.
And lastly, the commodity currencies. A little bit quieter on those fronts, but I'm sure there's some information that you can give us.
Yeah, for the commodity currencies, it's quite a week than, obviously the likes of the US dollar. For the Aussie dollar, you've got private sector credit figures on Tuesday, manufacturing numbers on Wednesday, and then the all-important retail sales figures on Thursday. Expect retail sales to be the key driver. RBA is reliant upon consumer spending to drive the economic recovery. There's plenty of uncertainty in terms of what lies ahead, so expect those numbers to be key. We've heard of the talk of rate cuts amongst some of the FX guys, so these numbers could spur further chatter on an RBA move in the near term. For the Kiwi dollar, quiet week really, just business confidence figures at the early part of the week. Obviously that's particularly key business investment, so expect that to influence. And then from the loonie on Wednesday, it's the RMPI and GDP numbers that will garner plenty of interest, particularly when considering the lack of stats that the markets have had to consider.
Well, that's all for today, Bob. Thank you so much for joining us, and I'll see you again next time. That was The Week Ahead with Bob Mason of FX Empire. But in the meantime, keep up to date with all the latest market developments by following us on all our social media outlets.